Hi, this is not Jimmy, but this is.
Hi, I'm Jimmy.
Welcome to Learn to Invest and Everything Money. We are teaming up. You are watching this video on Jimmy's channel, Learn to Invest. We are here in the Everything Money Studios in Akron, Ohio. We've invited Jimmy in to talk about our favorite stocks, to get the mindset of both Jimmy, Paul, and Mo. With my question today, we're talking about Intel. Paul and Jimmy were already talking about some of their differences with this company. We're going to look at the financials of this business, where we think it's headed, and what we should be paying for this company moving forward. This is incredible. Jimmy, as you know, they're building a $20 billion Intel building here near our studios, within an hour and a half of our studio. Exciting times for Intel. I want to hear both of your thoughts on this amazing company. Go ahead, boys.
Well, I'm a huge fan of Intel. I own Intel. I think I bought it at 45 and change or something. And I actually became a big fan of Intel when the stock started tumbling. And they had bad news come out one day that they were behind on their manufacturing of I think, their 10 nanometer chip. And the stock tanked. It was from like 70 to 50. And that's when I started buying it, as it fell into the 40s. And then since then, in my opinion, they're doing all the right things. They're doing all the things. So when I had done my research, I had identified certain holes in their business. One, AMD chips were a bit better than theirs. They were a bit more expensive. Intel was a bit more expensive than AMD if you're going out to buy the chip. And Intel's advantage was that they're huge and that they have so much cash and they have so much money and they're such a big player in the industry. I kept thinking, well, if they could turn this around, if they could turn around the manufacturing of their products, if they could get ahead of the innovation curve, if they could get ahead of that curve, this stock takes off again. Since then, they have their CEO got replaced, much better CEO now. Yes. Their company started growing once again. And the things that they're doing right now, building the plant in Ohio, they're building one in Germany, building one in Ireland, building one, I think, in China. I don't know about China. It might have been Tesla. Either way, they're building them all over the world.
They're very similar companies.
But they are ramping up. I think that Intel, the reason Intel is so interesting to me is if you look out 8-10 years from now, I believe they are the dominant player with most manufacturing capabilities to build more chips. And just like that, this stock should explode somewhere between now and then. So I'm more than happy to sit here as bad news knocks down this stock. Apparently, they've had 5 or 6 earnings calls over the past 5 or 6. They've beat earnings expectations every time, and every time the stock drops.
Paul, how does all that info tickle your ear? What do you think?
So I agree with pretty much everything Jimmy said. I don't look at Intel and AMD as some people out there would look at it and say, which one do I buy? That's not the way I look at it. I look at it as if they're both a good value play, I would buy them both. They're both a bad value play, I'm going to ignore them both. So I think Jimmy and I probably definitely agree on that one, just in general. I look at Intel as a cash cow that has the ability now to go reinvest that cash into infrastructure and expansion to be able to keep up with the technology of AMD. AMD has been nipping at their heels for about 20 years now. I remember in 2002 hearing, Intel's done, AMD is the best. And I want to make note about something else. This is the chart going back to 1996 of Intel. Guys, this company was the company, along with Cisco. $80 a share right here. Since then, revenue and profit have tripled. Since then. So if I told you back when it was $80 a share that over the next 22 years, revenue and profit would have tripled, what would you have said to me? Oh, this stock's in at least double or triple.
Mm-hmm.
Where's it gone?
Nowhere.
Absolutely nowhere. It's at $51 a share right now. 25-30% lower than it was back then. Why? Overvaluation. Over the long run, overvaluation. Valuations are what matter. Okay? You can overpay for a good thing. You can overpay for growth. You can overpay for innovation, unlike my girlfriend Kathy Wood says.
Crashy Wood.
She is wrong when she says it's stupid to short innovation. That's absolutely, you don't short innovation. You're shorting and you're betting against valuation over a long period of time. So here, guys, just like Jimmy, when I run the numbers, I feel much more optimistic about Intel. They're going to buy back shares, more and more shares as they grow. The revenue will not grow as much as AMD. Why? Because the pie is this big. Right now, Intel owns this percentage of the pie. But the pie's going to get a lot bigger soon. And even if they get a lower piece of the pie, it's still a bigger chunk of money. And that's my theory behind Intel. The world for semiconductors and chips is going to be huge. Guys, what percent of the world even uses chips on a daily basis, population-wise? We have China, India, and Africa who are still massively growing economies with massive technology requirements. You're telling me between those three areas, how many people are there? 4 or 5 billion people? At least half the world barely uses technology like we do here. Just a matter of time.
Yeah.
And never mind the products that are going to, how long is it really before our shoes have chips in them? I mean, everything is, my watch has a chip in it. Everything is just going to keep expanding. My refrigerator now, my vacuum, like things that didn't need it before.
It's incredible to think that, because when this car shortage stuff started, they started talking about chips that were needed for the mechanics of moving your seat in multi-directions and stuff. You're like, you don't even think how many chips are in a vehicle. Then to think about your watch and your washing machine and all of this. Something that I hear a lot is Intel's not going to be the number one company in the arena, so I don't want to own them. To me, that's an argument that it's something that we say all the time. A company doesn't need to be number one to be a great, profitable, and good investment.
And
that's
who's going to be number one?
People get caught up in that.
Oh, I guarantee they think AMD is going to be number one.
AMD or NVIDIA or whatever.
Have we ever seen the size comparison between
That's the
AMD
thing.
and NVIDIA?
Exactly
They're not
right.
even close.
That's exactly
AMD, Intel has more cash than AMD has generated in revenue in like the past year.
Yep.
No, way more than that, I think.
Is it? I
Well,
forget
let's look at
it's obscene, though, the difference in these companies. AMD is going to have to go on one crazy run for a long time. Plus, one other minor issue that I have with AMD, and anybody in our investing community has probably heard me go on this rant before, but AMD doesn't manufacture their own chips.
Mm-hmm.
They go through Taiwan Semiconductor. I don't know why that's not a bigger thing. I don't understand.
They're relying on one manufacturer. They could easily just say, we're done.
And it's amazing to me because all of the issues around Alibaba and the Chinese stocks and all of that, that's a thing, but it doesn't apply to Taiwan Semiconductor for some reason.
That's exactly what
And how come they can't? Why can't China go in there and say, okay, Taiwan's ours?
Yep.
You're no longer giving
Exactly.
AMD the chips.
And Jimmy, you know what's funny?
There goes the game.
We're starting to talk about Intel. Last week, NVIDIA said Intel might be making chips for us. So not only do they make their own, they might be doing it for NVIDIA.
Exactly. NVIDIA, Intel's making, I think they just came out with, they're making chips for Qualcomm or something. So like they're going further and further. Intel is such a large player in the industry.
Yep.
I think that one, picking size is somewhat irrelevant. If I told you that this guy's in 10th place, but he's going to win the race, why don't you? He's got to come in second.
Even if he doesn't win the race,
that alone
let him
could
come
be a
in
better
third.
return. Exactly.
It's not what you buy, it's how much you pay. That's it.
It's the only part of the game.
So the other argument is, would you take Intel for $1 but AMD for $1 trillion? According to what your logic is, AMD has more potential. That's a no-brainer. Mm-hmm. But clearly we can all agree. And by the way, to answer Jimmy's question, Intel in cash and cash equivalents, not including inventory, nothing like that, they have $28 billion in cash and cash equivalents. AMD
revenue
in the last 2 years have done $25 billion in revenue. So it took 2 years and a quarter to have the revenue that Intel has sitting in cash in their bank account. Doesn't include their inventory, doesn't include their AR, just cash.
Yep. And now that the new CEO, I was very excited about the new CEO. Now that the new CEO is there, who is a chip guy who wants to create the best chips, he's the reason they were like, all right, we're going to drop, $100 billion over the next 10 years, coming out with the future generations, but also the ability to manufacture this stuff all over the world.
Right.
10 years from now, Intel's going to have such a large presence. It's going to be obscene how far they go, or how far they potentially could go, of course.
And that CEO has put a really good concrete plan in place for the next 3 to 5 years.
I love it. Yeah. I love the plan that they have. And the other thing is,
you don't see that a lot anymore.
And it's tricky I think a lot of times people get caught from a valuation perspective, like on our discounted cash flow calculator. We have a huge mouse now, so that's exciting. But on the discounted cash flow calculator, if you come up with a fair value, what we do is the calculator, what it does is it takes the next 3 years of analyst estimates. Up here, it shows you how many analysts are projecting each number. So we can see we got 18 in 2022, 15 then 5. But what it ultimately is doing is taking those numbers and saying, okay, what is that stock worth today, assuming it does that, and then it grows forever at 2.5%. But discounted cash flow, using this method, as much as I love discounted cash flow, and it very much works, I'm okay with this because I know that they spent capital expenditures, 20 billion last year. Next year, 27 billion, then 28, then 28. They're expected to ramp those numbers up because they're building new plants, because they're putting a place in Ohio. They're dropping 10 billion here, 10 billion there. When those expenses go away and the free cash flow numbers ramp back up, before last year they put up 9.6. I believe the year before that they put up like 20 billion in free cash flow. I project they're going to get back to that point. And when they do, well, suddenly, if you look out far enough, suddenly the free cash flow numbers look very good. So for that, we're adding the ability to use revenue estimates, and that is how we get a $75 fair value. But part of that is you have to know the story. You have to know, well, of course, the next 3 years they're spending a ton. That's why free cash flow is going to be lower. I think people get too hooked on, oh my God, the free cash flow is going to be, it's down over the next year. I don't want to look at it. By the time those numbers look good, the stock's double where it's at today.
So it's funny because people will sit there and say, no, Paul, you're not getting the story. That's what we're talking about here. You're not getting the story.
That is the story.
Look at our free cash flow. And Jimmy, one of the things we add in our software, we add this line for free cash flow to make it easy. There's only 1 year in the last 10 that they had worse free cash flow than last year. Right here, the first year. And then look at their capital expenditure numbers. 11.8, 10.8, 10.1, 7.3, 9.6, 11.8, 15.2, 16, 14, 20. And as Jimmy said, it's going to 27 billion next year. And it's going to be 28, 29 billion for the next few years because Intel is being serious, saying, listen, and if I'm CEO of Intel, here's what I'm thinking. Okay, people are giving me value for free cash flow. Let me go reinvest every dollar of it back into the business or a ton of it and just make us explode. It's a funny thing in this company. My dad asks me every year, what was cash flow like? I'm like, garbage. Why? Because we reinvest everything. Our properties, if the properties make $2 million, I reinvest 2.5 back into the property. You know why? Because it's going to make my business worth, my real estate worth 4 or 5 million more. Why would I ever stop reinvesting back in my business? And that's what Intel is doing right now. They're saying, okay, we're not going to get the value for our cash flow. Let's just take it and become the market leader. Again, the obvious market leader to everybody out there.
And I think if I were the CEO, one thing that I would be looking at, and I think that this is a big benefit coming out of everything that happened with COVID and the lockdowns worldwide, and ultimately the chip shortages. If I'm him, I'm looking at this going, the whole world is going to more and more chips. The whole world is going to be putting chips in more things. We need them more timely. We need better chips, smaller chips, faster chips, all of that stuff. Let's become the chip producer in the world. Spend all of our money right now, ramp up all of our expenses. So in 10 years, we're the person. We're manufacturing 80% of the chips. And again, I don't know the size difference, from a physical number of units that Intel sells versus AMD. But Intel's the only company I know of, whether you look at an AMD or NVIDIA or any of those types of companies, that are ramping up their production capabilities to this extent. And for me, that's why I wanted to buy them. That's why I want to be involved, because I'm trying to see out in the future. And in the future, it looks like they're going to be a bigger player. They're going to spend their money to research and develop as good a chips as they can. But if something like this ever happens again, if something like COVID ever happens, any supply constraints anywhere, they're the go-to guy.
Yep, absolutely.
I think that they saw,
Correct.
Wait, we can't provide these chips. What do? We ran into these problems. Let's never get back in that position again.
Correct.
And I think that's going to help them big picture.
Yep.
If you're in the Learn to Invest community or the Everything Money community and you've not been exposed to either one of these chaps, it's amazing to see the two of you. Paul, I'm somewhat hesitant because I'm always hearing it from you. It's nice to see two value investors agree on a company. But what we need to know, and if you're watching at home, is, Jimmy, is this an entry point? Is this a current buy for you guys? Is it cheap enough as value investors still to get in? I know this makes up 13% of your portfolio. Let's get into some of the numbers, Paul. We're going to look at both the Everything Money stock analyzer and your discounted free cash flow model. Go ahead, Paul.
Yeah, so from a discounted cash flow perspective, it does look like, right now, the stock's trading at about $51 per share. I have the fair value at $75 per share. That's a decent amount of upside. So one thing that I do differently than Everything Money does is they bake in their margin of safety into it. I like to add the margin of safety after it. So I'll look at $75 and say, all right, you know what? There's some risks to this company. There's a possibility analysts are wrong, or maybe too optimistic. Let's say that I want to get in not at 75. If the fair value is at 75, I don't want to buy it at 74. I want to buy it at 65, 55. The lower, the better. The further away from the fair value, the better. So at 51 right now, to me, the stock looks very good. Now, I personally won't be buying any more shares, but that's only because I got in at 55 and change, and I just don't want to average up. If it gets below 50, if it gets below 45, I'd be happy to jump in and buy more.
You got in at 45.
45.
Yeah, you just said 55. So guys,
Did
he
I
got
say
in
55?
Yeah,
45,
he got in at 45. Now me, I bought in from 45 to 55, and I am still selling puts on the way down at lower prices to try to get the shares at a lower price and being paid along the way. So here's our analysis. Now ours is a little bit different. We input our own numbers. I'm doing a 10-year analysis, and part of this you can do 1 to 20. So let's just be conservative. Let's go 2, 4, and 6% revenue growth. What do the analysts have for Intel's revenue growth potential? I believe they have them going from $75 billion a year in revenue to $125 in the next 5 years, which is an increase of 60%, which is around 10% a year. Okay. So I'm being very conservative.
Yeah,
Profit margin, let's go 20, 22, and 24. Free cash flow, even though the free cash flow numbers are lower, and they're going to have very low free cash flow, this is for a stabilized business, and we'll get into that in just a little bit of time. Now, PE. The current PE is 10. Okay? Again, I'm going to do 13, 15, and 17.
I like a healthy PE discussion. Mo and Jimmy, how do those numbers hit you?
I'm sorry, what did you put?
13,
13,
I put in
15?
13, 15, and 17 for my PE.
I think that's fair. It's a big company. I mean, unless they can completely reinvent themselves in a way that I think it's a fair value. What do you think, Jimmy?
I think
17 is fair.
one of the
for a
things that we
decade out.
use on our discounted cash flow calculator is we have these charts. This is a historical chart of PE, and it has been all over the place.
Well, you say historical. Going back 5 years.
Going back 5 years, yeah. Going back 5 years. But point is,
40 PE.
11 is so obscenely low from a PE perspective for this company. One of the reasons I like to look at the history of the company is that people might say, you know what, I love, you buy AMD, you buy whatever the company is. I love this. I want to buy it right here. But then you look at it compared to its own history. Well, you could have bought it a lot cheaper before. Mm-hmm. Right now, this is a lot cheaper. It is so low compared to its own history.
But with that said, this is where Jimmy and I definitely disagree. If the future of Intel was negative 10% growth a year, 11's too high. So even though the history might have shown this big number, it's still too high if the growth potential for Intel in terms of revenue was, let's say, hypothetically 10% a year decrease.
Of course. And I should clarify, my assumption here is that we've done the research. Now, for me, because I've researched the company and I know what I expect in the future, I can look at this and say 11 feels stupid low. Whereas if I hadn't researched the company, if I was just looking at it quickly and I see it this low, frankly, if I saw it this low, I'm researching it looking for, is this a value trap? Because if the future looks meek for the company, just stay away from it. You're better, even the cheapest companies, I'd rather avoid. I'm looking for reasonable amounts of growth at a fantastic price.
So, Jimmy, if you were filling in Stock Analyzer on that high end, what would your PE be?
I put 13, 15, 17, low, middle, high.
I mean, I think that's perfectly reasonable.
Okay.
I think 13,
cool.
I think that's perfectly fine. Intel's, the other thing about PEs is that PEs are going to be, for larger companies, they're going to be smaller. They should be smaller.
They should be smaller.
So, if 17 on the high end, yeah, sure, that would, for a large company, that would be pretty good. I think 15 is very reasonable. But 15 compared to 11, I can only imagine when you hit the calculate button here.
And guys, guess what? 2, 4, and 6% revenue growth numbers I think are conservative.
I actually put in 369.
Yeah, I think you're going to end up somewhere between.
Would you say,
4
Dan,
and
you're
6.
fine?
369.
Hit the analyze button, guys. All right. Look at me. What was your price, Jimmy, on the high side? 70. What fair value was? 75. I'm at 77. Low side, 42. Middle, 57. Now, again, I think that's very, very reasonable considering the growth rate potential. I actually don't believe this growth rate is reasonable. And I actually don't even think 369 is reasonable. I actually think it's like 4, 6, and 8%. Analyze. 90, 66 middle, 48 low. Now, I like to focus on the middle number because I look at 6%. Like I said, analysts expect about a 10% revenue growth rate for the next 4 or 5 years. I still being conservative. And this allows for a lot of margin of safety here buying at $51. And I personally, I have a lot of Intel, but I'm selling puts along the way. For those who don't know what that means is I'm selling somebody the right at a lower price to force me to buy the stock. So they're paying me to buy the stock at a lower price from them.
And from where your number is here at 66 compared to where my number is at 75.
Yep.
You're using 12 and a half.
Correct.
I'm using 7.5. So even I actually have here, we have the same calculation for if you use 10%. That's what these are. If you use 10%, 12 and a half, what would the fair value be? And for me, that sort of, you end up in a very similar spot. Yes,
How'd you get 38 on 12.5%?
but that's only based on the free cash flow because it's only going out the next 3 years.
Oh,
where
gotcha.
yours is more,
Based on
where mine
revenue.
is more conservative, is ultimately what this is doing is it's taking growth. You have growth, whatever your growth was, at 6% going out 10 years.
Yeah.
Mine doesn't. Because we have a perpetual growth rate of 2.5%, we're assuming about 5% growth, 4.5% on this final year. And then the next year and every year after is at 2.5%.
I think Jimmy's being conservative though.
It is very conservative. But again, that's one of my ways of justifying, one, a lower required rate of return, but also if it's conservative and I'm wrong on it actually turned out to be higher, great, the stock goes higher. Yep. It just makes me buy less stocks, which I like.
Jimmy, for your Learn to Invest community, how can they get this website?
So we have there's a link in the description below to how to sign up for the website. And the good part is that we're locking in the price for anybody that signs up to the website. We're locking in the price, keeping it locked in. The price will never go up on you. And the Investors Grow website is going to be up and running by the end of the second quarter of this year. We're in the middle of building it, and the discounted cash flow calculator is going to be the first feature we bring to the market, and then we're going to keep adding features as we go from there. So come over. When you do that, you also get access to our investing community. We got almost 1,000 people in that community right now, so it's exciting to see a lot of the ideas that I've gotten. In fact, every idea I've gotten since we left here last time has come from the community. So I'm excited about it.
Yep. Same thing with us.
Yeah, we got a link to their website as well, how to sign up for their software if you want to get access to this.
Everythingmoney.com, same thing. Community, we have about 6,000 members in there. You get the software, everything you saw here. You get it all on your mobile phone as well. So you don't just have to get strapped to a computer. You can do it on your mobile phone. And this is our community right here, guys. You can go in there. It's our own chat. You can go look up Intel, find exactly where people are talking about Intel, go have a conversation. It's much easier for hundreds of people to do research than one person. So go do it. Thank you very much.
And our community is going to have a battle to the death with their community.
Yes.
We've decided that on the spot. We're gonna do that later. We're gonna duel. Him and I will sword fight.
Oh, it's sort of fight there, Jimmy, but
Want them to joust.
I'm winging this as we go.
You win.
so that is the take. Follow Jimmy, obviously. Subscribe to Learn to Invest. Check out his website. Come on over to Everything Money. We welcome in the same discussion with our community as well. Everything Money, the YouTube page, and everythingmoney.com. We will keep you updated. Jimmy, we have to have you back in the next few months. And of course, for both of our communities to hear what you guys have to say. Intel's amazing. You guys are talking me into this more and more. I love hearing you guys banter over this. And yeah, thanks for watching. See you next video.